The federal government has been quietly taking money out of your Social Security check every single month for 43 years. Not through taxes, not through fees. Through two rules buried so deep inside the Social Security Code that most lawyers had never even heard of them. Rules that were never explained to you when you filed. Rules that were never printed on your benefit statement. Rules that were simply applied, silently, the moment your first check was deposited. Here is the number that should make every single person watching this stop cold. $196 billion. That is the total amount the Congressional Budget Office has confirmed is owed back to American retirees, widows, teachers, firefighters, and federal workers under a law that was signed just months ago. $196 billion. And the Social Security Administration is not calling you. They are not mailing you a letter. They are not sending you a notification of any kind. If you are in the affected group and you are waiting for SSA to reach out, you are going to wait forever. My name is Lucien Vale. I cover Social Security law, policy changes, and the practical steps that determine whether retirees collect what they are owed or leave it sitting in a federal processing queue. Today's video is the most important one I have published on this channel. By the time this video ends, you will know exactly what these two rules were, who they targeted, how the money was calculated, why millions of people still have not received a single dollar of their correction, and the specific steps, including one that almost nobody takes, that determine whether your back payment gets deposited or disappears. Stay through the end. The final section on widows and widowers contains information that SSA is not explaining to anyone, and that directly determines whether you collect $22,000 or collect nothing. If you are not subscribed, do it right now. Turn on the notification bell. Social Security rules change every year, and nobody translates what those changes actually mean for your specific check. That is exactly what this channel exists to do. Let's go. For 43 years, the Social Security Administration operated with two provisions embedded in the benefits calculation code that reduced or completely wiped out the checks of millions of Americans. These were not loopholes. They were not errors. They were intentional legislative decisions made in the early 1980s that were supposed to prevent what Congress called double dipping. The theory was that people who received government pensions from jobs that did not pay into Social Security should not also receive full Social Security benefits on top of those pensions. The problem is that the rules did not just prevent double dipping. They punished people who had worked multiple jobs across their careers. People who paid into Social Security for years through private sector work, paid into separate pension systems through public sector work, and ended up having both pools of earned income treated as if they were gaming the system. Here's exactly how each rule worked. Rule 1. The Windfall Elimination Provision, WEP. The Windfall Elimination Provision targeted workers who had what is called non-covered employment, jobs that had their own pension systems and did not withhold Social Security taxes from paychecks. Public school teachers in certain states, firefighters, police officers, state and local government workers, federal employees hired before 1984. These workers paid into their separate pension systems throughout their careers in those roles, but most of them also worked other jobs at other points in their lives. Summer jobs, part-time work, private sector positions before or after their government careers. Every paycheck from those jobs had Social Security taxes withheld. Those workers were building Social Security records the same as anyone else. When they retired and went to claim their Social Security benefit, WEP applied a modified benefit formula that systematically treated their Social Security earnings as worth less than they actually were. The standard Social Security formula replaces a higher percentage of lower lifetime earnings. It is designed to be progressive and protect lower earners. WEP changed that formula specifically for workers with non-covered pensions, reducing the percentage used to calculate the benefit on the first portion of their earnings. The practical effect was a permanent monthly reduction. The average cut under WEP was $480 per month. For some workers, it was as high as $587 every single month. That reduction never adjusted back. It was built into the base benefit calculation from day one of retirement and stayed there until death. Over 3.2 million Americans were living with that reduction as of the day this law changed. Think about what that means over time. A retiree who collected Social Security for 15 years under WEP lost, at the average reduction, $86,400. Not because they did anything wrong, not because they failed to contribute, because they had the specific combination of a government career and other Social Security covered work. Rule 2. The Government Pension Offset, GPO. If wet P was the rule that cut workers, GPO was the rule that devastated families. The government pension offset targeted spouses, widows, and widowers who were entitled to a spousal or survivor benefit based on their husband or wife's social security record, but who also received a government pension from non-covered employment of their own. Under GPO, the spousal or survivor benefit was reduced by 2/3 of the government pension amount, every month. Here's what that looked like in real numbers. Say a retired teacher in Illinois receives a state pension of $2,100 per month. 2/3 of $2,100 is $1,400. GPO subtracted $1,400 from her spousal or survivor social security benefit. If that benefit was $1,300 a month, the subtraction did not just reduce it, it eliminated it entirely. She received zero, nothing from her husband's social security record. Not $1 from decades of his payroll contributions into a system that was supposed to protect surviving spouses. That outcome, complete elimination, happened to 800,000 widows and widowers across this country. Not a reduction, a total wipeout. And here is what made GPO particularly brutal for surviving spouses specifically. When a husband or wife dies, the survivor is often at their most financially vulnerable. They lose one income stream. They face funeral costs. They face the transition to a single-person household. Social Security survivor benefits exist precisely for this moment. GPO took that safety net and, for 800,000 people, removed it entirely. Why these rules lasted 43 years. Over the 4 decades these rules were in place, Congress introduced 300 separate bills to repeal them. 300. Members of both parties sponsored legislation. Teachers' unions, firefighter associations, police organizations, federal employee groups, they all lobbied. They testified. They showed up at hearings year after year. They sent tens of thousands of letters. Not one bill passed. The reason is straightforward. Repealing the rules costs money. The Congressional Budget Office estimated the repeal would cost $196 billion over 10 years. Every Congress that considered repeal eventually looked at that price tag, weighed it against competing priorities, and moved on to other business. The 3.2 million people affected kept collecting less. The 800,000 widows kept collecting nothing, and the rules stayed buried in the code. Until January 5th, 2025. The Social Security Fairness Act was signed into law on January 5th, 2025. Both provisions, WEP and GPO, were eliminated completely. Not phased out over a decade, not reduced gradually, eliminated, effective immediately. And the law included something that almost never happens with Social Security legislation. It was made retroactive. Retroactive to January 2024. That means every single person whose benefit was reduced under WEP, and every single person whose spousal or survivor benefit was reduced or eliminated under GPO, is owed the difference between what they actually received and what they should have received, going all the way back to January 1st, 2024. A minimum of 12 months of back payments, issued as a single lump sum direct deposit. Let me give you the numbers. The average retroactive lump sum payment issued so far is $6,710. That number covers roughly 12 to 13 months of the average WEP monthly reduction being reversed. The average permanent monthly benefit increase for WEP-affected workers is $360 per month. That is $4,320 more per year. Every year, for the rest of retirement. Compounded against average retirement length, that is a life-altering amount of money for people who were already living on fixed incomes. For widows and widowers who had their entire survivor benefit eliminated by GPO, the numbers are far larger. A survivor benefit of $1,840 per month that was fully erased by GPO. That is a back payment of over $22,080 covering January 2024 forward. Plus the full reinstated survivor benefit going forward every single month. For a 70-year-old widow with a 15-year life expectancy, that reinstatement is worth over $330,000 in total future benefit payments. These are not theoretical numbers. These are the actual dollars the Social Security Administration currently owes to real people right now in 2026, some of whom have still not received a single dollar of their correction. The processing problem nobody is talking about. SSA has to process over 4 million individual account corrections under this law. 4 million. The agency was already operating under significant administrative strain before this law passed. The processing volume that the Fairness Act created is unlike anything SSA has managed in modern history. They are working through corrections in batches. When your case falls into a later batch, it sits. The system does not flag it for you. The system does not send you an alert. You continue collecting the old, reduced benefit amount while your correction waits in a queue, and you have no way of knowing it unless you check. The SSA Inspector General specifically flagged this as a significant concern in 2025 reporting. That language, significant concern, is the federal government's way of saying a large number of people are not getting the money they are owed and they do not know it. Here is the specific breakdown of what can go wrong. Problem A. Your monthly benefit has not been updated at all. You are still collecting the WEP reduced amount every month, and no retroactive payment has been issued. Your case has not yet been processed. Problem B. You received the retroactive lump sum, but your ongoing monthly benefit is still running on the old formula. The back payment was issued, but the forward correction was not applied. 2 separate corrections are required in these cases, and only one was made. Problem C. You qualified for corrections under both WEP and GPO. For example, a retired government worker who was also entitled to a reduced spousal benefit, but only one correction was applied to your record. The second one is sitting in a separate processing queue. Problem D. You are a widow or widower whose survivor benefit was not just reduced, but denied outright under GPO. Your original application was rejected, not approved at a reduced amount. There is no approved claim in the system to reverse. The automatic correction process cannot apply to your case because it has nothing to reverse, and SSA has not contacted you to explain this. That final problem, problem D, is the single most important piece of information in this entire video. I am going to give you the exact steps to address all 4 of these problems in part 3. Before we get to the action steps, let me be precise about who is in the affected group. Listen for your situation. Group 1, public school teachers. If you worked as a public school teacher and your state's teacher retirement system did not withhold Social Security taxes from your paycheck, and at any other point in your working life you held jobs that did pay into Social Security, you are in the WEP affected group. The states where this most commonly applied are Alaska, California, Colorado, Connecticut, Georgia, Illinois, Kentucky, Louisiana, Maine, Massachusetts, Missouri, Nevada, Ohio, Rhode Island, and Texas. If you taught in one of these states and also have Social Security work history from other employment, your benefit was almost certainly reduced under WEP. Group 2, firefighters, police, and state or local government workers. If you served as a firefighter, police officer, or any state or local government employee in a position covered by a government pension system that did not pay into Social Security, and you also have Social Security work history from other jobs, you fall into the WEP affected group under the same framework as teachers. Group 3, federal employees under CSRS. If you were a federal government employee hired before January 1st, 1984, and you were enrolled in the Civil Service Retirement System, CSRS, not FERS, your federal employment was non-covered under Social Security. If you also worked other jobs where Social Security taxes were withheld, WEP was applied to your benefit calculation. This is a critical distinction, CSRS versus FERS. If you are unsure which system you are under, do not guess. Call your former agency's HR office directly and ask them to confirm in writing which retirement system your employment was under. If it was FERS, you were covered under Social Security throughout your federal career, and WEP did not apply. If it was CSRS, it did. Group 4, spouses, widows, and widowers with government pensions. If you were entitled to a Social Security spousal benefit or survivor benefit based on your husband or wife's work record, and you also receive a government pension from non-covered employment, GPO applied to your case. If your spousal or survivor benefit was reduced, you are owed the amount of the reduction back to January 2024, plus the corrected higher amount going forward. If your spousal or survivor benefit was eliminated entirely, reduced to 0, you are in a separate category with a different required process, which I will explain in full detail in the next section. If your original application for spousal or survivor benefits was denied because GPO would have reduced the benefit below 0, meaning SSA rejected your application outright rather than approving it at 0, your situation requires specific action that is different from all other cases in this entire group. This is the situation I flagged as problem D. This is where $22,000 back payments are sitting uncollected right now. Here are the 4 steps. I am giving you 4 instead of 3 because the widow and widower situation has 2 distinct sub-steps that must be handled separately. Step 1. Verify your current benefit statement online. Go to ssa.gov and log into your My Social Security account. If you have never created one, do it today. You need your Social Security number, a valid email address, and about 10 minutes. The account setup is straightforward. Once you are logged in, navigate to your benefit statement. Write down your current monthly benefit amount. Then look specifically for any notation referencing WEP or GPO. These may appear as line item reductions in your benefit calculation history. Compare your current monthly benefit amount to what you were receiving before January 2025. If the amount has not changed, or if you see a WEP or GPO notation still showing in your record with no corresponding increase, your correction has not been fully applied. Also check for any one-time payment recorded in your payment history between January 2025 and today. If you see a lump sum payment but your monthly benefit did not change, you may be in the problem B category, partial correction only. If you do not see any change and you believe you should be in the affected group, move immediately to Step 2. Step 2. Contact SSA directly and use the right language. Call the Social Security Administration at 1-800-772-1213. Write this sentence down before you dial and read it word for word when an agent answers. I want to verify whether my account has been fully corrected under the Social Security Fairness Act for WEP and GPO, including both the retroactive payment and the ongoing monthly benefit adjustment. That specific phrasing tells the agent exactly which system to open, which correction history to review, and which 2 adjustments to verify, the lump sum and the forward monthly correction. Agents are handling hundreds of calls about this law. The more precisely you identify what you are asking for, the faster they can pull the right information. When the agent responds, write down exactly what they tell you, including the agent's name or ID number, the date and time of the call, and the case status they give you. If they say your case is pending, ask for the expected processing date and ask them to place a formal note in your record that you called to inquire. That note creates a paper trail. If they say your case is closed and your benefit should have been corrected, but the amount looks wrong to you, say these exact words. I would like to file a formal request for reconsideration of my benefit amount under the Social Security Fairness Act. That phrase, formal request for reconsideration, triggers a supervisor-level review of your entire correction record. It is not a standard callback. It is a separate administrative review process that puts your case in a different queue with a different level of scrutiny. Use those exact words. Step 3. Request written confirmation. After your call, follow up with a written request. You can mail a letter to your local Social Security office or, in some cases, submit a written inquiry through your online account. Your written request should include your full name, Social Security number, date of birth, the date of your phone call, the name or ID of the agent you spoke with, and a clear statement that you are requesting written confirmation of your correction status under the Social Security Fairness Act, including the specific amounts of any retroactive payment issued and any adjustment to your ongoing monthly benefit. Having this in writing is critical if you need to escalate further. Verbal case status information over the phone is helpful, but not binding. A written response from SSA creates a record you can reference and, if necessary, use in a formal appeal. Step 4. The widow and widower sub-steps. This is the step that most people miss. This is the step that directly determines whether you collect your full back payment or collect nothing. If you are a widow or widower and your survivor benefit was reduced under GPO, follow steps 1 through 3 above and verify that the reduction has been reversed. But if you are a widow or widower and your survivor benefit was eliminated entirely, reduced to 0, or if your original application for survivor benefits was denied, you must take an additional action that is completely separate from the standard correction process. When you call SSA in Step 2, ask this exact question. Does my case require a new survivor benefit application under the Social Security Fairness Act? And if so, what is the deadline to file? Here is why this matters. SSA's automatic correction process is designed to find approved claims in the system and reverse the GPO reduction that was applied to them. But if your original claim was denied outright, not approved at a reduced amount, but rejected entirely because GPO would have eliminated the benefit anyway, there is no approved claim for the system to find and correct. The automated process skips your case entirely. In these situations, you are required to file a completely new application for survivor benefits. Your eligibility is now established under the new law because GPO no longer exists. But SSA does not know you are eligible until you file. The back payment, if you file and are approved, goes back to January 2024, the same retroactive date as everyone else in the affected group. But here is the critical detail. If you do not file, that money does not accrue interest. It does not carry forward indefinitely. SSA's processing policies on lapsed retroactive claims can result in benefits being forfeited if not claimed within certain timeframes. Do not wait. If there is any possibility your original survivor benefit application was denied rather than reduced, call SSA immediately and ask that specific question. The filing of a new application takes one phone call. The cost of not filing that application can be $22,000 or more. Once your correction is confirmed and applied, there are 3 things you should do to protect yourself going forward. First, document your corrected benefit amount in writing. When SSA confirms your corrected monthly benefit, print or save a copy of your updated benefit statement from your online account. Store it somewhere secure. This is the baseline record of what you are owed every month going forward. If SSA ever makes an administrative error and reverts your benefit, which does happen on rare occasions, you need this documentation to correct it quickly. Second, set a calendar reminder to verify your benefit amount every January. Social Security cost of living adjustments are applied every January. That is also when SSA makes administrative updates to millions of accounts. Log into your My Social Security account every January and verify that your monthly amount reflects both the COLA increase and your corrected base benefit. A discrepancy caught in January is far easier to resolve than one discovered 18 months later. Third, if you have surviving family members who might be entitled to benefits based on your record, make sure they know about GPO's elimination. Spouses who previously assumed they would receive little or no survivor benefit from your Social Security record because of their own government pension, they should now verify their entitlement. The calculation has completely changed. Benefits that would have been fully eliminated under GPO are now fully available. This is not a minor adjustment. For many families, this changes the entire retirement income picture. For 43 years, the federal government reduced or eliminated Social Security benefits for millions of Americans using 2 provisions buried inside the benefit calculation code. Rules that were applied silently, never explained at the time of filing, never printed clearly on benefit statements. The rules are gone. The back payments are real. The average check is $6,710. For widows and widowers who had their entire survivor benefit eliminated, the number is over $22,000. And none of that money moves from the federal processing queue into your account unless you take action. SSA is not calling. SSA is not sending letters. The corrections that are not challenged stay uncorrected. The money that is not claimed does not accrue interest. It sits. The 4 steps I walk through today are the specific actions that determine whether your correction gets applied or whether you keep collecting the old, reduced amount indefinitely. Step 1 costs you 10 minutes on ssa.gov. Step 2 costs you 1 phone call. Step 3 costs you a letter. Step 4, for widows and widowers, costs you 1 additional question on that same phone call. If you know someone over 60 who worked in education, government, law enforcement, or who lost a spouse and collected little or nothing in survivor benefits, share this video with them today. Not next week, today. The retroactive window is real, and the administrative delays inside SSA are real. Every month that passes without a correction is a month of back payment that becomes harder to recover. Subscribe to this channel if you want to stay ahead of Social Security changes that affect your actual monthly check. I cover every significant rule change, every policy update, and every administrative development that impacts what retirees actually receive. I'll see you in the next one.